Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you 3 different option strategies that can be used on Robinhood in order for you to capitalize on the current momentum. For those of you that do not know, Robinhood has been confirmed to be added to the S&P 500. So I'm going to show you option strategies that will allow you to capitalize on this momentum that is going to be going through right now. Now, if you're new to options trading or you're trying to use options to make some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you 3 different option strategies that can be used in order for you to capitalize on Robinhood's momentum. Robinhood will be added to the S&P 500 at the end of this month. So there is lots of money to be made by trading this stock. We're going to go through 3 of these different option strategies that's going to allow you to make money. I'm going to go from the least risky to the most risky. I'll be giving you entry and exits and everything in between. Now, you guys know how we do it. We like to go ahead and get down and dirty with options because there's only 3 ways guaranteed for you to learn options, and that is practice, practice, practice. So let's go ahead and jump into the Robinhood advanced feature right here in order for us to go ahead and open up the charts. Now, we're going to go ahead to the 1-year outlook in order to see what we get. Now, I'm going to start from the top. I want you to see the high that this stock has made. This stock has made a high of, it shows here 114, but it's actually made a high of around 117 so far for the year. So with this current momentum, I'm very strong in the belief that it's going to go up even past that. Now, the 200-day moving average is way below the current price that the stock is trading at. The 200-day moving average is at 62.33 or thereabouts. Now, here's one thing about stocks charts. This price right here and this 200-day moving average, sooner or later, they're going to come together. Either this share price is going to come down to meet it, or this average price is going to come up to meet it. Now, the 200-day moving average, it just tells us whether share price has been trading for the last 200 days or 6 months. Now, we're going to go down to the RSI, or what's known as the Relative Strength Index, in order to see where that is. Now, the Relative Strength Index is a momentum indicator. It simply indicates to us whether the stock's current share price is in overbought territory or oversold territory. Right now, Robinhood is at 55 RSI, which is not too bad considering this stock has been going up over the last couple of years. So 55 RSI is really, really decent. So RSI, anything moving from the 50 RSI going upwards towards the 70 RSI tells us that the share price is going into overbought territory. As you can see, Robinhood is not quite there yet, but it is going up. So this presents an opportunity. So let's go ahead. We're going to go back to Robinhood now, and I'm going to go ahead and get into the options. Now, if you guys like these kinds of videos, now would be a good time for you to go ahead and like the video and subscribe to the channel. If you guys have any questions about Robinhood or any of these strategies I'll be going through in today's video, just let me know in the comments below. So what we're going to be doing, we're going to go ahead to trade hood options down to the bottom in order for us to go ahead and open up our options chain. Now, the option chain gives us enough information for us to make a decision before entering any options contract. Now, speaking of getting into options contracts, I would like you guys to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio may not work for yours. The second favor I really want you to do yourself is that always make sure you have an exit strategy before entering any options trade. That way, if the trade were to go against you, then at least you know how to get out of the trade. That being said, let's go ahead and get into strategy number 1 that can be used to trade Robinhood with its current momentum right now. And for that, we're going to go over to sell. We're going to go over to put, and then now I'm going to be choosing the expiration date. I'll be going with October 10th, and the reason for that is that it gives me 33 days to expiration. The reason why I chose this strike date is because I like doing monthly options when I'm doing this particular option strategy. Now we're going to go ahead and we're going to choose our strike price. The strike price I will be choosing is going to be below the current share price, and I'll be doing what's known as ATM or at the money. I'll be going with the $108 strike price. Now, this is super close to the current share price, but I have my reasons why I would be choosing this. I'm going to explain the reason to you in just a second. Now, for choosing this strike price, I'll be getting paid. The amount I'll be getting paid is going to be $11.15. Once you translate that into the real world, that's going to be $1,115. Now, this option strategy is going to be known as the cash secured put. In order for you to do a cash secured put, you must have a certain amount of money in your portfolio that can be used as collateral. In this case, your collateral is going to be $108 multiplied by 100 shares, which is going to give you $10,800. Now, for those of you that don't have this amount of money in your portfolio, that's quite fine. I'm going to show you how to use option strategy if you're trading with a way smaller account. So don't worry about that. I got you guys. So with the cash secured put now, you're going to be getting a return of $1,115. One thing I like to do on this channel before getting into any option strategy is look at my ROI, or my return on investment. In this case, my percentage ROI is going to be the amount of money I receive, which is going to be 1115. I'm going to divide that by the amount of collateral I need to leave in order to do this option strategy, which is going to be $10,800. And that's going to give me a return of 10%. A return of 10% is an extremely lucrative return on trading any stock, especially with an option strategy that takes you literally 2 minutes to do and trading from the comfort of your own home. Now, the reason why I'm going to be going with the at the money strike price is because history has shown us that whenever a stock is added to the S&P 500, it usually goes up, moving towards the date that is actually added into the S&P 500. So until Robinhood is actually added to the S&P 500 at the end of the month, I'm of the belief that this share price is going to continue going up. Hence, I chose my strike price at the money. Good. Now, what we're looking to do for an exit strategy for Robinhood is that we're not going to be waiting until 33 days. What we're going to be doing, we're going to be waiting until we have a certain percentage return on this strategy, and then we're going to close out the options. So for instance, as soon as you do this trade, you will be getting $1,115. You can, if you want to, choose to let this options go to expiration, and you're going to win. This first option strategy is known as a win-win option strategy. That means doesn't matter how the trade goes, you're always going to be winning with this stock. However, if Robinhood is a stock that you do not want to hold in your portfolio over time, then what you can do is that once you up on the play, let's say 75 or anything above 75%, then you could go ahead, you could close out the trade, lock in your investment gains, and that's it. Now, let me explain to you what I just said. Once you go ahead and do this option strategy, you're going to be receiving $1,115. That is yours to keep no matter how the trade go. In order for you to exit this position, you're going to have to give back some of that money. The amount of money you're going to give back is probably going to be 25% of this value here. If you're going to be giving back 25% of this value here, that means you're going to be up on the trade of 75%. And there you have it. That is the first option strategy that I'll be using on Robinhood right now to capitalize on the current momentum. Now, the next option strategy I'll be using, especially if I'm trading with a small account, we're going to go ahead, we're going to stick to sell, we're going to stick to put, and we're going to stick to the monthly expiration date. However, this time, because the strategy has changed, we need to change our risk reward. So what I'm going to do, I'm going to go all the way down to the $100 strike price. I'm going to go ahead and select that. Now, I'll be going to buy while maintaining put and maintaining the exact same strike date, and I'll be choosing my strike price right below the previous strike price. So now I'm going to be going with a $99 price. Let's go ahead, we're going to select that. This new option strategy is going to be known as a put credit spread. The reason why you could use the put credit spread, especially if you're trading with a small account, is because the barrier of entry is extremely low. In order for you to do this option strategy, all you need to have in your account is a minimum of $100. Let's go ahead and hit continue. Let's hit review. And there you have it. In order to do this option strategy, all you need to have in your account is a collateral of $100. Now, here is your gains. The put credit spread is one of those option strategies that give you very high returns. The reason why it gives you very high returns is because it's what's known as a defined risk option strategy, meaning there's defined risk. Whatever your collateral is, you can lose the entirety of that collateral. However, the reason why I decided to showcase this option strategy is the risk to reward is fine by my standards. Let me show you why. So once you go ahead and do this option strategy, you're going to be getting money right away, like the previous option strategy. The amount of money you're going to be getting is going to be $79.92. Let's just round it up to 80 bucks. So what you're doing is that you're actually going to be risking $20 to make $80. Let me show you the math. So once you do the option strategy, you're going to be receiving $80. The collateral you need to leave is going to be $100. The difference between your $100 and your $80 is going to be $20. So if this trade goes against you, the maximum amount you're going to lose is going to be $20. Like I said, in my humble opinion, I think the risk to reward is very good with this option strategy. Now, let's go ahead and we're going to go into the last option strategy. And like I said, this one is going to be the riskiest option strategy. So let's go ahead. We're going to clear the parameters just a tad before we enter in the next one. So with this option strategy, and like I said, always make sure to do your own due diligence before investing. Also, these videos are for entertainment and educational purposes only, and it's a mere reflection of what I'm doing with my personal portfolio. So what I'm going to be doing, the third option strategy that I would consider doing with Robinhood, I'm going to go to buy, I'm going to go to call, and this time I'm going to change my strike date. The strike date I'll be going with is going to be October 24th, and that's going to give me around 47 days to expiration. Now I'll explain to you why I chose 47 days in just a second. Now, what I'm going to be doing, I'm going to be going at the money once again, and this time I'll be going with the 109. This time I'm going at the money, but above the share price. There's usually two at the money. At the money just means the closest price to the share price. So at the money, you could have an at the money above. You could also have an at the money below. So I'm going to be going with the ATM above, and that's going to be 109. I'm going to go ahead and select that. Now, this option strategy is known as a long call. This option strategy as well is a defined risk option strategy, meaning that there's a certain amount that you can lose. For you to do this option strategy, you're going to have to pay. The reason you're going to have to pay is because you're going to be buying something. The amount you're going to have to pay is going to be $7.95. When you translate that to the real world, that's going to be $795. Now, how do you win with this option strategy? Once you go ahead and you purchase a long call in your portfolio, all you need to do is go ahead and do nothing. The whole purpose of you buying a long call in your portfolio is that because you're of the intention that the share price is going to continue to go up. Now, this is how you win with this option strategy. Once this share price here keeps going up, your return is unlimited. There's no cap to the amount you could gain with this option strategy. Now, the downside is the only amount you could lose is the amount you invested, which is going to be this $795 here. Now, Robinhood has showcased that it has touched the $117 mark, and I just demonstrated that by the chart. So, exit strategy. This is what I'll be waiting for. I'll be monitoring this one closely. This option strategy needs to be monitored way closely than the previous two that I showed you. So what I'm going to be doing is that I'm going to be waiting and watching for the share price to keep going up. Now, to give you a basic idea of how you're going to get money with this option strategy, the current share price now is $109, and you're choosing the 109 strike price. So if Robinhood goes to 110, you're going to make $100. If it goes to 111, you're going to make $200, and so forth and so forth. That's just the basic idea of how this is going to work. What you're going to be doing for an exit strategy is that whenever you decide that you have gained enough of this, whatever the share price is, then you could go ahead, exit this option strategy, and lock in your investment gains. Me personally, I'll be looking for the share price to go to 115. That's my first price I'll be considering, and then I'm going to get out of this trade. If I have multiple contracts, then I'm going to close off some of my contracts and let the others ride while maintaining a stop loss at $115 strike price. Now, there you have it, investors and future investors. Those are three option strategies that I would employ in my own personal portfolio if I was trading Robinhood right now, in order for me to capitalize on that momentum of it being entered into the S&P 500. Now, for those of you guys that made it to the end of the video, you guys are the real investors and future investors. Go ahead, like the video if you haven't already. Subscribe to the channel. Make sure to hit the notification bell to get an alert when I post a video. But most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we can start making income with options trading. Now, until the next video, keep pushing your investments.